Hey guys, welcome to my channel. My name is Justin. Today I want to talk about Dillard's. There was some big news that came out in the stock market today. Their stock jumped 40%. So I wanted to talk about what happened with them. It's a good time to buy into them. So before I get into it, guys, if you really like this video, please hit the like button. Please subscribe. It really helps out the YouTube algorithm. Helps my channel out a lot. I really appreciate it. So let's get right into it, guys. So let's talk about what happened today. Why did it just jump up 40%? So there was news that came out that Ted Weschler, who is one of Warren Buffett's lieutenants or proteges or whatever you want to call him, bought about 5.8% of the outstanding shares for Dillard. So on that news, people just started buying into the company like crazy. Before the news, Dillard's was about a $900 million market cap, and I think today, when the stock market ended, they were around a $1.3 billion market cap. So pretty big jump today just in general. So if you don't know much about Dillard's, they're a brick and mortar retail store. Usually find them in the malls. They operate in 29 different states, roughly about 300 stores in total. So, what I like about Dillard's is that they are family owned. Their CEO, a couple of their VPs, all have the Dillard's name to them. When I had done some research back in March, because I was really interested in Dillard's at that time, on paper they looked like they were at a really good valuation. When I read their 10K, they have a number of family members, just not in the VP level, but director level as well too, which I found pretty interesting. Now it's a store actually my wife likes the most out of all the mall retailers. So generally, if we go to the mall, that's a store that we go into. She likes the low cost that Dillard's brings compared to a lot of the other mall retailers, and she likes the clothes there. So I'm very well aware of that store in general because of my wife. The things I like about the store or about the company in general is that they have $560 million of long-term debt. Compared to the $1.3 billion market cap, that may seem high, but retailers in general tend to have higher long-term debt. So in that instance, I look at the long-term debt versus equity ratio, and that's about a 26%. So anything to me under 40% looks pretty good. And looks favorable just in general. Their current ratio is hovering just under 2, so that's basically current assets over current liabilities. And given this market the way it is right now, that's pretty decent. Now let's talk about things I don't like about Dillard. So let's take a look at what the analysts think that Dillard is going to do over the next 5 years. And according to the analysts that are following them, they're thinking their sales are going to drop 50% over the next 5 years, which is pretty interesting because next year they think it's going to go up 100%, which is easily doable with their stores being shut down for a couple of months, and the mall traffic has just been considerably down just in general. Now I would say that negative 50% is really pessimistic. I don't think it's going to be that bad, but that just kind of tells you that this is a company that's in decline, and you can see that in their earnings per share. So on average over the last 3 years, they've gone down about 13% per year, and then their cash flow has been going down on average about 11% per year as well. So those are not really good signs. You don't want a company that's going down at those kind of rates, obviously. Another thing is their cash. So they're sitting at $83 million in cash. Now, if you look at last year's annual income that they brought in, they were hovering around 110 million. So, having $83 million in cash, to me, and given the $1.3 billion market cap, that's not very good in general. So, I mean, they could go out and raise some more money, but in general, they don't tend to keep a whole lot of cash on hand. But it's enough to get by, I think, and they could go raise money if they had to. But where they're at now, I don't really like that. Now let's kind of talk about valuation, where they're currently sitting, and if I were to buy them, where would I buy them at? So Right now, there's no forward PE. You know, they haven't earnings the last 2 quarters. They probably don't have any earnings for another couple of quarters still. But their trailing P is around 11, which is pretty decent. It's actually pretty consistent compared to the last couple of quarters as well. And maybe that's what Ted was, one of the things Ted was looking at that he liked. Now, if you look at their 52-week high, it was $84. And so today, even with the 40% increase, they were sitting around like low to mid $50 per share. So where they're sitting right now, it might look like it's a pretty good deal. But if you look at where they were right before this whole Rona situation happened, back in February, they were sitting at $56 a share. So this snapshot here shows $53 a share that's sitting at. So if you're going to tell me that, you know, Dillard's is just in a good position that they were in February versus they are now into the future, I would totally disagree. You know, I don't think that their e-commerce business is in a very good place compared to some other companies that are in the market, even their same industry. So you know, I think this is a company that's in decline, not going up. So, you know, for me personally, if it's under $30 a share, that's interesting. I probably wouldn't start looking to buy until they were under $25 a share. When I was looking back in March, they were around like $24, and I almost bought in. But the company that I really like that's in the same space as them is Nordstrom. So Nordstrom's is sitting on about $990 million of cash. Now, as far as market rate or market cap goes, they're about 4 times the size of Dillard's, but you know, they have over 10 times as much cash, and their e-commerce business is a lot farther along than what Dillard's is. So I wouldn't touch Dillard's with a 10-foot pole. My personal opinion is you're going to see the stock going to go down over the next few months. We'll see where it ends up being. I think Dillard's, you know, could be a win for Ted in the, you know, over the next couple of years potentially, depending on where he bought it at. He probably bought it in the 20s, but you know, that's my opinion, guys. Thank you for watching the video. I hope you liked it. Again, please hit the like button. Please subscribe. Thank you guys so much. You know, talk to me in the comments. What do you think about Dillard's? Do you like Dillard's? You know, are there other companies in the same sector that you're buying, like a Nordstrom or something else? I would appreciate it, guys. So I will see you guys on the other side. Thanks. Take care.